Hey everybody, Real Estate Ninja here. I hope you're doing great. I came across a great article of a billionaire warning about the collapse in real estate, and I want to go over it with you and talk to you about it. And I think it's very important because we always need different uh, avenues of information to be able to bring in information and be able to dissect it. And it's not always the same person. I like, news is one thing, but when we hear the opinions of very successful wealthy individuals that have made it, we need to take heed, right? And there are some wealthy people, billionaires out there that are warning people. There are some that aren't. Okay, so let's go over this story and we're going to talk about it below. Okay, here we go. All right. This story is out of Yahoo Finance. It just came out. It's entitled Inflation is About to Drop Hard as Rents and Housing Prices Tank, billionaire investor Barry Sternlicht says. Now, this is along the lines of what I've been trying to teach people ever since I started the YouTube channel, but we're going to use his words and then I'll go over it. Okay, inflation will drop off thanks to falling rents and housing prices, Barry Sternlicht says. The billionaire investor pointed out falling rents, which will show up in inflation data later this year, and he warns against high interest rates that could over tighten the economy into a severe recession. All right, so let's go through the story. Inflation is about to fall off as rent and housing prices tumble, according to billionaire investor Barry Sternlicht. I think inflation is going to drop hard, Sternlicht said in an interview with CNBC on Tuesday, pointing to falling rents in recent months. Though shelter inflation in the Consumer Price Index report jumped 8.1% year over year in February, more current measures of housing inflation, like rents, are tanking. Over the last quarter, effective rent in multifamily units dropped in 76% of housing markets, and effective rent fell about 1% nationwide, according to a recent report from Moody's Analytics. Now, let me stop there. And I did a video on the Economic Ninja channel that talked about Moody's essentially downgrading the housing market, saying that they are expecting nationwide homes to fall in 2023 and 2024, 4.1% around each year. Okay. I believe it's going to be much longer than that, but it's one of the first times I've ever seen a credit agency like Moody's come out and really give an advanced idea of what they believe is coming in the real estate market. Now, where I believe this is very, very important, because usually they're just upgrading or downgrading things, right? Sectors, stocks, stuff like that. Where I think it's very important is because it's so blaringly obvious that the real estate market is going to crash that they're out here saying this. Why? It's a sure bet, so they know it, okay? These are the things I teach in the course. Also, for everybody, real quick, I got to say that bought the real estate crash course, I know that it's done and completed. I think it was like 27 or 29 videos. I actually just filmed 3 more videos. Why? Because there's more and more coming out that I want to share with you. So if you guys have done that, go take a look at it. And below, there are some coupon code left. I think there's 19 available down there. If you want, no worries. Now let's dive back in. So easing rent prices will eventually pull down shelter inflation, experts say, as real housing prices in the economy often lag behind the official statistics by around 18 months. This is perfect because this is exactly what I've been teaching, that new construction is a lagging indicator to the health of the real estate market, and that these statistics always lag because human emotion acts first. The government puts out, or companies put out, their official numbers, like their earnings and statistics and things like that. And then they are always, in a downtime, sharply revised to the downside months later. So you don't see or learn the actual truth of these statistics or official numbers that are coming out from these companies or sectors until months later. Okay, that's what's very important to realize. And this billionaire understands that. Check this out. Sternlicht estimated that the impact of lower rents would show up mid-year, which could show major progress on the Fed's inflation fight, as housing prices account for around a third of headline CPI. Again, I've been saying this for a long time. Housing is the largest wealth creator in the world, and the health of the housing market makes the greatest wealth effect in the retail investor's mind. Okay, so when that is shattered, it can have devastating effects on the world, okay, on the world's economy. I think people need to understand that. All right, so All else being equal, inflation is going down, he added, pointing to other areas that have been impacted by falling prices, such as food and energy. However, I disagree. I believe we're going to still see higher food and energy prices because of consolidation, companies going out of business, certain ingredients costing more. That is happening on the broad spectrum. We are seeing those things start to come off of their highs, but not enough to, I believe, make a difference right now. Other market commentators have disagreed, warning that inflation is still a problem and prices could remain sticky unless the Fed keeps interest rates restrictive, which I do personally believe that they are going to keep interest rates restrictive for a while because they have to make sure that they've done their job. Because the last thing the Fed wants to do is pause too early and then inflation start to pick back up, and then the Fed is looked at like you didn't know what you're doing. All right. Central bankers have raised rates over 1,700% in the last year. Now, on a percentage basis, that is insane, which are still well above the Fed's 2% inflation target. But the lag in economic data means inflation is likely much lower than the Fed thinks it is. Sternlicht has previously argued, making the case that the Fed should dial back on its aggressive policy to avoid over-tightening the economy into a recession. I will stop right there and say that I believe we are already in a recession and that the Fed is about to put us into a mini depression. Now it says here, with rates now at their highest level since 2007, he said a recession is inevitable and predicted a severe downturn ahead for the US economy. And again, this year right here, 2007, very important because this was when rates were the last time this is at their highest level. That is what pushed us into the Great Recession. I want to make sure that people understand how serious these times are, but at the same time, how amazing they are. Because as you see the pieces come together, and this line up just like the same time frame between 2004 and 2008, yet on a much bigger scale because of the sheer magnitude of the amount of money that was created in just the last 3 years alone, you start to really understand and can appreciate how big of an opportunity this is going to be for you. Because when house prices start to really tank, they're going to tank hard, they're going to tank fast. And again, the lagging indicator to the strength of the real estate picking up, it'll be based on the human emotion that people are scared to buy a house because they're not savvy investors and they're afraid of catching a falling knife, meaning that if they buy their house next month or the month after, it will continue falling in value. And it's something that they can't look past. Remember, most people are not investors. They are betting that whatever they put their money into is going to go up. They don't like to think that they're putting out is going to continue to go down. So a real investor looks at multiple things, multiple aspects of an investment, like real estate. Like I talk about, you should be making money 5 different ways off of real estate. And if you don't know how to do that, you need to gain the knowledge and understanding of how to do that, because it makes your decision-making process that much more clear and that much easier to make when you're contemplating buying an asset that is falling in perceived value. All right, guys, I hope you got something out of this. Thank you so much. Thank you for everyone that hits the thumbs up and that subscribe to the Real Estate Ninja channel. This is not my normal channel. It is serving as a backup channel. I hope you guys have a great day. The Real Estate Ninja is out.